We actually followed the path a lot of Australian companies did to finance their businesses, and that's basically finance it by selling something good to customers. And so most Australian businesses, tech companies today, have actually built really, really good operating businesses. And it's taken a long time to kind of get there because there haven't been a huge amount of financing provided up front. But companies like Kogan, Ruby's doing about $300 million a year in revenue, or $200 million a year in revenue. Atlassian, until the very late stage, didn't raise any money, bootstrapped the entire way. Our business, Envato, hasn't raised any money from anywhere. They're doing about $30 million a year in revenue. Redbubble down in Melbourne. There's a bunch of these companies that really had to just finance themselves by building a good product, going there, iterating on the product, and getting out to market and getting financed in that way. So that's kind of why today there's a lot of really great companies popping up the other end of the pipeline, right? And the number of global leaders in their spaces. So we did something a little bit different. We've been running for about 5 years and just been bootstrapping. We got a little bit of money at the very beginning just to buy a business, not to operate any, for any operating capital, but just to do it with a little acquisition of a very small number of millions of dollars. And we kind of got to a point where we thought we've been pitched term sheets from VCs all the way along. Now in the Australian market, there's not really much of a venture capital community. In fact, I've actually said it's completely dead. I've written many articles sort of about this, sort of explaining what the dynamics. I'll talk about it in a second. But if you want to go raise, say, $50,000 or $20,000 in Australia, there's people everywhere looking for money, right? There's even great accelerator programs. We've got Nikki here from StartMate. They'll give you 50 grand now, is it? Up from 20 grand, and so forth. There's a lot of guys that will give you that sort of money. In the late stage, there's a lot of foreign venture capitalists that are constantly out here trawling through startups. They know all the lists. They've been doing it for a couple of years, and some are quite active. So you've got companies like Excel that have done financing in Oz4X, Atlassian, 99 Designs. I'm missing one that's happened recently off the top of my head. You've got Sequoia, who's been out here quite actively. They haven't, I don't think, done any investments yet in Australia that I can remember. Insight Venture Partners just did an investment in Campaign Monitor, and so forth and so on. So a lot of these late stage guys are kind of prospecting, but it's kind of a valley of death. If you want to raise between sort of $1 million and sort of $5 or $10 million, it's virtually non-existent. And the stats that were up here a little while ago, if you go back here, there's only about $111 million in the entire of the Australian venture capital industry per annum committed. And if you compare that, for example, to Atlassian's last funding round of $150 million, the entire Australian venture capital, you couldn't actually finance that one round, right? And in fact, if you read the AVCAL report on last year's investments, they said, I think it was like 40 million is sort of early stage, 30 million is kind of growth stage, and 20 million is late stage. Now, the definition of a late stage investment is $20 million or more. So, and they said that something like, I think 19 late stage investments were done with $20 million. So I don't know what sort of like lemonade stands they're investing in at late stage with that sort of money, but basically it's pretty dead. So. But we were getting a lot of term sheets from US venture capitalists, Chinese venture capitalists, and so forth. In fact, there was one Australian venture capitalist in the syndicate that gave us a term sheet. And we kind of thought after running the business for 4 or 5 years, it kind of gets a little bit frustrating. When you bootstrap your business for 5 years, we had, at the time, we had 9 million users around the world. We were, my business is eBay for jobs. So we're delivering jobs to people in the developing world. We're seeing all this amazing economic prosperity we're bringing to a number of people in developing economies, and you can't see Instagram go and get bought for $1 billion with 13 people, no revenue, and 551 days old. You kind of get a bit frustrated saying, maybe I'd raise a bit of money and kind of put a stake in the ground as a valuation. So we're going to look at these term sheets and had a whole bunch of them, and then someone actually suggested to us, why don't you think about going public on the ASX? And I've actually written prolifically about why I think that's actually the future way that all Australian technology companies will actually get financed. But I never actually thought about really actually pulling the trigger and doing it with a freelancer. But had a thought about it, and I thought, well, you've got to come with money where your mouth is and take a risk sometimes. And I think that if it was successful, it'd be good for us, and not just good for us, but also be good for the rest of the community who might actually think about this as an alternative funding path. So we did that. There's a whole story about the process of going public. It's actually fairly inexpensive. I mean, and the process is a lot less complicated than negotiating with the average VC. The average VC, it takes 6 to 9 months of negotiations. You're begging. You're knocking on doors. Please. They're saying, what if you do this? What if you do that? Let's do a strategy day. Let's do that. And maybe it takes you a year, maybe it takes you 18 months, maybe you never raise the money, but you're just constantly begging. When you go public, and then you have to negotiate a telephone directory full of investment documents that basically divides up all the control structures and control mechanisms of the business. So even though you're giving a very small amount of the business away, you're giving up pretty much all the control of the business, or very quickly you'll give up all the control of the business. And to compare and contrast that to going public, well, in Australia, we don't have Sarbanes, obviously. We don't have a number of these over-regulated regimes like you have in the US after the GFC. And it's actually quite straightforward. In fact, the ASX is actually a fantastic place in terms of a market globally, because just as much money was raised on the ASX in the last 5 years than NASDAQ, right? The only issue is for technology companies, it's all in resources, so mining. But in mining, it's done tremendously well. And effectively, what better way to finance a business than crowdfunding it? And effectively, that's what the stock market is, it's crowdfunding a business, right? So if you've got an early stage mining company in Australia, you can go to the ASX and you basically write a prospectus, and you can raise $1 million just with a bit of PowerPoint and a tenement and maybe no drill holes in the ground. Or if you're BHP, you can go raise $1 billion, right, on the ASX. So it's tremendously well as a financing mechanism. You don't have to go down Cold Hill Road, knocking on doors, begging VCs, negotiating complicated preferred stock structures. You literally write an offering document, you say what you're going to spend the money on, you have to be very careful about writing that document, but that's it. So I actually found the process of going public actually significantly easier than pretty much 80% of the venture deals I've been involved in. I've been in quite a lot of them. For the last couple of venture funds, I've helped a lot of staff get funding. So that was actually quite straightforward. People complained, oh, the cost of it's very expensive to go public, right? So you could actually negotiate less than what we paid, but I'll give you an idea of the cost. So we had an underwriter for a $15 million raise, and we actually paid them $450,000 to underwrite a $15 million issue. So that's pretty inexpensive. I could have negotiated that significantly lower, I discovered afterwards. We paid $50,000 to the investigating accountant to write the accountant's report. We paid $100,000 about to the lawyers, and that was it. That was the total IPO cost, and that comes out of the IPO proceeds. So it's actually not that expensive, because mining companies for years have been raising $1 or $2 million, and there's cost-effective ways to actually go and list and raise $1 or $2 million for mining companies, and you can just use the same lawyers and what have you that exist for these sort of companies. So it's fairly inexpensive. It's actually very straightforward in terms of what you do. You just write basically a little business plan, and then in terms of actually raising money from people, this is the thing that kind of blindsided me. And I went out there kind of thinking, okay, well, who can I go ask for money? Who will we do the roadshow with? Who will be good investors? And when you raise money, you're begging in the venture space. With going public, it's very weird, because all these people sort of come out of the woodwork that you don't even know, and they email you and they say, I'm a fund manager, I'd like to take $5 million in your float. And you're like, oh, $5 million, that's only a $15 million float, and I can give you maybe $20,000. And they say, get lost, and they get angry with you, right? They're not taking their money. And then someone else, sends you an email, we're another fund manager, can we get $3 million in your float? And you're like, oh, I can give you maybe $50,000. And they get angry with you and say, oh, I want to give you more money. And then a dentist from Queensland says, I've read about you in the papers, I'd like to give you $1 million from my super fund, please take it. And you say, maybe give you $2,000 in the spread, and they say, get stuffed, right? And it's kind of weird, all these people are trying to give you money, and it's complete opposite of when you're kind of begging. So that was we had I think it was about $300 million worth of interest for a $15 million float. And so they're dividing it all up, you try and give as much as possible to staff, as much as possible to friends and family around that. And then kind of out of the woodwork, you'll get kind of, your former chairman will say, can I put some money in? Your parents will suddenly say they'll want to put some money in. Your uncles, your aunties, whatever, I won't mention names, but some very, very well-known high net worth individuals will start calling up saying, oh, we want to put $5 million in, and you're saying, oh, maybe 250, and so forth. So it was an extremely complicated thing to do. But it was pretty straightforward, I think, for the most part. And certainly, once a bit of experience gets out there in the technology sector, I think people are going to realise there's actually a very, very straightforward way of actually financing businesses. Now, to prove the point of actually how much demand there is actually for tech out there, I mean, the IPO actually was the third biggest opening ever on the Australian stock market. The stock went from 50 cents to $2.50 on open, which the market capitalisation of the business went up to 1.1 billion on the first day, which is pretty interesting, especially when you're standing there trying to figure out what the stock price is on the screen. There's a 50-cent issue price, I'm looking for a certain price, and obviously it's 2.50, I know what's that? And it's like, oh, that's the stock price. And it's like, okay, it's interesting. But I mean, moving forward, I probably don't have much more time to talk. But just moving forward, the reason why I think why this market is just such an important thing to consider in terms of financing a business is the way to set up this. The reason why there's a very simple reason why the Australian venture capital community only spends $111 million per annum on tech companies, and the reason why is because Australian venture capital isn't even really known as an asset class in this country yet, right? Because they haven't generated a return. Money is global now. Money will flow to where the greatest return is. Australian venture capitalists have just never shown any return. And there's a bunch of reasons why, but one of the biggest reasons is that Australian venture capital to date has missed, pretty much without exception, every single major technology success story Australia's ever seen. You know, companies like Atlassian missed, BigCommerce missed, Kogan missed, Freelancer missed. They've all missed. The only one they probably called was Looksmart, and that was 10 years ago, right? And there's a lot of reasons for this. One is that I worked as a venture capitalist before actually, when I came back from the States and before I started companies. And Australian venture capitalists have been running a startup themselves, right? Their businesses, they've got to show a return with Fund 1 to get Fund 2 off the ground. And a lot of them came from a banking background and they're not operated as businesses, and they've been very risk adverse. And they wanted to see people with a Stanford degree, right? And that's kind of how my first business got financed. They said, oh, well, no one ever got fired for buying Cisco. No one's ever getting fired for financing the guy that came from Stanford. It didn't work. All he came from Stanford, maybe, you know. So they've been very, very risk adverse because the industry has been very, very new. And when they've been managing companies, they've done a particularly bad job. The job of a venture capitalist is to finance a business and provide some guidance and help, and not to actually be in the management. And in my experience, in my last business, I had the most horrible venture capitalist that on the first day came in and just thought they were just running the business. And let me tell you, when it's expensing their due diligence costs for financing, and it includes ham sandwiches and all sorts of other rubbish that you're just trying to get paid out for, it's just a joke. Anyway, so it hasn't generated a return, and it hasn't really been a lot of operators of businesses running these funds. Now this is changing with things like Blackbird, Nikki's here doing that, who are actually going out there and actually have people around them who actually have experience and domain expertise building businesses, and that would be good. But the reason why I don't think the industry is going to get big anytime soon is the way that we've set up funding Australian venture capital in the past has been through programs like the IIF program, where the government will provide matching 50-50 funding to any venture capitalist that wants to get a fund off the ground. Now the problem with that is the government only commits $25 million a year to this program, right? So all these people are kind of waiting back and holding back to try and win this IIF grant. And as a result, because no limited partner wants to put money into a fund and not have the free gearing from the government, so they're all trying to hold back and wait for that. And it takes a lot of guts, like Nikki did, go out there and doing it without the IIF fund to actually go and start a venture firm. I mean, for the government to actually fund venture capital in this sort of way, they're going to have to put like $1 billion into it per annum, and they're not prepared to do that. They're more interested in funding the Chico Roll Factory or the car industry. These are all declining businesses where all the job growth is actually coming out of startups and high-tech businesses. But anyway, I think the future is crowdfunding. I think the future is through the ASX, and I think that if you do some really, really smart things in terms of legislative reform, such as taxation incentives for tax breaks for investors in qualifying early stage startups, like they do in the UK, where if you the crowd invests in the startup through the ASX or privately through crowdfunding, and there's two things Malcolm Turnbull's going to do. He's already got the ESOP problem fixed. He was going to announce that around the budget time, that he thought it was going to get lost in the noise, but that's coming. And the other thing is crowdfunding equity, early stage companies. He's going to do something now, I'm pretty sure about that. But I think crowdfunding of companies is the way forward, both either privately or listed, and I think you can do some taxation incentives like, if you invest in a risky startup, you get a tax break in the current year, you get a capital gains break if you hold it for a number of period of years, and if you dust your money, you also get a break. I think that's the future. But anyway, it's exciting times. I'll probably take this word for a lot more than 15 minutes, but I hope you enjoyed it. Thank you.
Questions for Matt? Any questions from the audience? Okay, if not, speaking of tech deals that the Australian market missed, I heard from my taxi driver that the octopus system that is employed in Hong Kong and Singapore was actually invented here in Australia.
I think that's fixed technologies.
Yeah, so, and it's been really slow to, it was commercialized in Hong Kong and Singapore before here.
Well, I think the problem is that there's a lot of bureaucracy around how the fare system in Australia and New South Wales, so you've got all these different ways of train tickets, whatever, and none of it's integrated, it's all priced differently, and I think that was the big problem was actually trying to find some sort of harmonious system to actually price. Like if you go to New York subway, you pay $2 and that's it, right?
Yeah.
And I think that caused a lot of the issues with commercialising it, yeah.
Okay. Any questions for Matt? Okay, yes. Please identify yourself. Where's our mic? Hold on, can you step in with the mic? Okay. And your name again? Sorry.
Mark Bradley, Semantic Software.
Okay.
We're actually IPOing next year as well. Have you got an advisor, like an investment bank or something like that? Go get the capital for you?
My strongest recommendation probably would be go talk to the guys at Canaccord. They're very prolific in the sort of the mid-market for tech on the public markets in Australia. A guy called Alex Underworth. He'll be able to give you a lot of advice in terms of the process.
Another question. Okay, Kurt. And just wait for the mic to come around quickly.
If the public markets are the answer to funding for startups,
yep.
What's the answer to the chasm between public market funding, from seed through to that?
Yeah,
and what do you see is the venture capital industry to play a part in that?
So I was in New Zealand just recently for the CANS conference, which is like the Korea Australia New Zealand Technology Symposium, which is kind of a weird thing. But I was sitting with Malcolm Turnbull, and we were discussing the limits for crowdfunding. And I strongly advised him that we want to set the threshold so that you can finance business up to $5 million from new crowdfunding legislation. And basically, you can crowdfund now, but you can have a prospectus, right? Is the issue in Australia, and that could be complicated and costly if you want to raise a small amount of money. But I think if we can get the legislation right for crowdfunding properly from large groups of people in small amounts up to about 5 million, then after 5 million have the ASX, then I think you kind of cover the gap, right? The late stage, by the way, I should mention, all these deals that these late stage US venture capitalists are doing in Australia, so we're talking 99 Designs, we're talking Campaign Monitor, and so forth. These are pretty much full buyouts or majority buyout businesses, right? So buyout situations. So they're not actually financing businesses for the founders to actually continue really running them per se. They're actually financing so the founders can actually get liquid, which is great for the founders when you've got 99% of your wealth tied up in the business. It makes a lot of sense to do this sort of thing sometimes. But I'd like to see more late stage deals around like the Atlassian style deal where the founders are staying on and they're growing businesses up.
Okay, well, okay, one really quick last one. Okay.
Hey, Matt, Chris York from Equitize. How big do you think the equity crowdfunding market is in Australia?
What do you mean today in terms of what
Actually,
the ASX or today in
yeah.
terms of the unlisted side?
The unlisted side of it.
Well, it's mostly illegal unless you expect it.
The potential size of it.
I would have to think. I'll tell you one thing, just one statistic I can remember, and that's that the entire venture capital industry last year with $111 million financed 59 companies. Already since January of this year, the ASX has had 55 technology floats.
Okay, I think that's a good note to end on here, and let's give Matt a round of